So this is the first component of WACC. The first component is your cost of debt. The interest rate a firm must pay on its new debt is defined as its before tax cost of debt, and it is denoted by RD. Again, it is the same concept that the return for your people who have given the loan to the business, for example, the bondholders, will be the expense for the corporation. That's why we're denoting it with the sign of return. Over here it is written new debt. This is important because all of your WACC calculations are based on future cost of debt, cost of equity. Means you are calculating, you're interested in फ्यूचर प्रोजेक्ट्स. फॉर एग्ज़ाम्पल आपको कोई फैक्ट्री खोलनी है तो फैक्ट्री खोलने के लिए जो पैसा आपके पास आएगा वो पैसा आपने डेट के थ्रू इशू किया है या इक्विटी के थ्रू, किस तरीके से यू हैव रेज्ड दैट कैपिटल विल हैव एन impact on the expense of that money which you will later use for that project. So you're interested in future projects. आप ऑलरेडी कैपिटल बजटिंग पढ़ चुके हो. सो इन कैपिटल बजटिंग रिमेंबर यू कैलकुलेटेड NPV, IRR, प्रॉफिटेबिलिटी इंडेक्स, इस तरह की बहुत सारी टेक्निक्स थी. And the rate that was used over there for discounting purposes, the R that was used over there were actually your WACC. So WACC is used for discounting purposes in your capital budgeting techniques, and capital budgeting techniques are all related with future projects. कि फ्यूचर में आपने कहाँ पे कौन सा फैक्ट्री खोलनी है, कौन सी शॉप खोलनी है. सो इट्स ऑल रिलेटेड टू फ्यूचर डिसीजंस. Now, firms can estimate RD by asking their bankers what it will cost to borrow. So, one way of figuring out कि cost of debt क्या है is very simple. आप किसी भी बैंक मैनेजर के पास जाएं और उससे पूछ लें कि भाई अगर आप हमें फ्यूचर में लोन देंगे तो what will you charge the interest rate. तो वो आपको एक estimated interest rate बता देंगे. One way of doing it is this way, and the other way is to find the YTM. अगर आपने बॉन्ड इशू करना है तो बॉन्ड्स के केस के अंदर तो you don't go to a bank, but you can calculate the YTM yourself. Again, this is something you have already studied in Principles of Finance. YTM is the interest rate, the return the bondholder earns if he holds the bond till maturity. अगर मेच्योरिटी तक बॉन्ड होल्डर यानी कि जिसने कॉरपोरेशन को लोन दिया है वो बॉन्ड को अपने पास रखेगा, दिस इज़ द टोटल रिटर्न दैट इन्वेस्टर विल गेट. और अगर ये इन्वेस्टर का रिटर्न है तो ये ऑटोमेटिकली आपके कॉरपोरेशन की कॉस्ट हो जाएगी. You are more interested in not the before cost of debt but the after tax cost of debt, which is used to calculate the weighted average cost of capital. After tax component आप कैसे निकालते हैं? इंटरेस्ट रेट में से टैक्स सेविंग्स आप सब्ट्रैक्ट कर देते हैं. Now इंटरेस्ट रेट में से टैक्स सेविंग्स कॉस्ट ऑफ डेट में सब्ट्रैक्ट इसलिए होती हैं बिकॉज रिमेंबर इंटरेस्ट इज टैक्स डिडक्टेबल. इंटरेस्ट के ऊपर टैक्स नहीं लगता है. इफ़ यू लुक एट योर इनकम स्टेटमेंट, ठीक है, इफ़ यू ट्राई टू रिमेंबर योर इनकम स्टेटमेंट, आपके पास ऑपरेटिंग प्रॉफिट होता है which is also called your EBIT. ऑपरेटिंग प्रॉफिट में से फर्स्ट यू सब्ट्रैक्ट इंटरेस्ट. So you get your profit before tax, and then tax is applied and you get your net income. So interest is subtracted first और फिर उसके बाद tax लगता है. That's why interest has a tax shield in it. And if you want to calculate the true cost of debt, you will have to subtract that tax shield out of it. So let's look at an example. If Allied can borrow at an interest rate of 10% and its marginal federal plus state tax rate is 40%, its after tax cost of debt will be, so simply आपने values plug in करनी है. RD is the before tax cost of debt, so that is 10%. 1 minus T, so 1 minus 40%, which means 0.4. 10% and 1 minus 0.4, so this becomes 0.6%. So the after tax cost of debt is 6% for the corporation. Before tax was 10%. वैसे 10% होनी चाहिए थी, लेकिन बिकॉज इसमें टैक्स शील्ड है एक, तो वो एक्सपेंस उनका रिड्यूस होके 6% का हो गया. So let's look at an example as well. A company has outstanding 20-year non-callable bonds with a face value of 1,000 and 11% annual coupon and a market price of 1294.54. If the company was to issue new debt, what would be a reasonable estimate of the interest rate on that debt? If the company's tax rate is 40%, what is its after-tax cost of debt? So this is a question जिसमें अब आपको before tax cost of debt given नहीं है. You do not have RD. Instead आपको उसने bonds की सारी information दे दी है. So if you do not have RD, you will have to figure out the YTM. तो bond valuation का उसके लिए हम formula use करेंगे. Bond valuation का formula होता है CP, which stands for coupon payment, multiplied by 1 minus R minus N. सॉरी, यहाँ पे 1 माइनस डालना था, मैं डालना भूल गई. सो इरेजर. Okay, so 1 minus 1 plus R minus N over R plus face value, future value, bar value, it can be anything, 1 plus R power N. This is the bond valuation formula. If you do not remember this, I'll share with you the bond valuation videos as well. So coupon payment, how do you calculate this? A company has outstanding 20-year non-callable bonds. So your N is 20 with a face value of 1,000. This is the par value, face value, 11% annual coupon. So first we will calculate the coupon payment, which is coupon rate multiplied by face value. The coupon rate is 11%, the face value is 1,000, so this will become 110. So we have a coupon payment of 110. And this is the market price. So this is the bond value. The bond value is 1294.54. You do not know what the R is. The R is your RD. The cost of the before tax cost of debt. 1 plus, you do not know what this is. And N is 20 minus 20. Face value was 1,000, 1 plus RD over 20. So now there is no way of solving for RD because RD comes at 3 places. If you try to solve it in any other way, it will be too complex. A way to solve this question is through trial and error approach, which means you will have to plug in different interest rates and see where the answer comes 1294.54. So in your calculators you will put this much of the formula and you will solve for this and see whether your answer is coming 1294.54. If your answer matches this, it means that is the interest rate. Now whenever you get this question, I will always give it to you in the form of MCQ. So you will have 8%, let's say 4%, then 12%, and then 15%. So you will have these rates with you. Once you try the 8% rate, it means you will keep 8% on all three places. You will see that the answer will come exactly 1294. So instead of writing RD, what I mean is that you will put this 8% over here. The rate 8% here as well, and the rate 8% here as well. Then you will solve this in the calculators and your answer will come 1294.54 on 8%. So you will know that this is the correct answer. If you try the other interest rates, you will see that the answer will not come exactly this. So once you have your YTM, once you have your RD, the next step is simple. You have to calculate the after-tax cost of debt. So the after-tax cost of debt will be, given that the tax rate is 40%, it will be 8%, 1 minus 0.4, which is 4.8%. This is the after-tax cost of debt. So these are the answers to the question. Now moving ahead, the cost of preferred stock, it is very simple to calculate. The component cost of preferred stock is the dividend. So DP stands over here for dividend divided by the price of the stock. So this is your dividend yield formula. प्रेफर्ड स्टॉक के अंदर प्राइस अप्रिसिएशन एज सच उतनी ज़्यादा नहीं होती है. दैट्स वाई द फार्मूला इज सिंपल. यू आर जस्ट कैलकुलेटिंग द डिविडेंड यील्ड फॉर योर preferred stock, which is dividend divided by price. Let's look at an example. Allied would sell the preferred stock to a few large hedge funds. The stock has a 10 dividend per share and it would be priced at 97.5. So if we calculate this is the formula. Dividend is 10 and the price is 97.5. That means 10.3% is the return for the preferred stock, and this is the cost for the corporation. Remember, preferred stock has fixed dividends. It is not like common stock. इसके अंदर fixed dividends होते हैं. So 10 dividend हमेशा देना होगा. Plus इसके अंदर वोटिंग राइट्स नहीं होते हैं, बट दे स्टिल डू हैव द लिक्विडेशन राइट्स एंड दे आर पेड बिफोर एनीथिंग इज पेड टू द कॉमन स्टॉक होल्डर्स. Then we come to the cost of common stock. Now common stock can issue equity in two ways. Number one, directly by issuing new shares. तो एक तरीका तो पैसा रेस करने का थ्रू कॉमन स्टॉक है कि आप स्टॉक एक्सचेंज के ऊपर शेयर सेल कर दें. Once the corporation sells shares in the stock market, investors will purchase those shares and corporation will get that money. This type of capital raising is denoted by RE. There is another way that your common equity can increase, which is indirectly by reinvesting or retaining earnings, which is denoted by RS. Again, we will go back to your accounting equation, which is assets is equals to liability plus owner's equity. This owner's equity has your common shares and your retained earnings as well. तो एक तरीका तो इक्विटी को बढ़ाने का है कि आप कॉमन शेयर्स मार्केट में इशू कर दें. कॉमन शेयर्स बढ़ेंगे तो इक्विटी भी बढ़ जाएगी. Another way is to increase the retained earnings of the business. What are retained earnings? Retained earnings are the accumulated profit of the business. This is increased by net income. नेट इनकम यहाँ पे जाती है तो रिटेन्ड अर्निंग्स आपकी इंक्रीज हो जाती हैं. बट यू नीड टू थिंक कौन सी नेट इनकम यहाँ पे जाती है. द नेट इनकम गोज ओवर हेयर आफ्टर पेइंग और आउट एवरीबडी एल्स इंक्लूडिंग द कॉमन स्टॉक होल्डर्स एज वेल. दिस इज द रिटेन्ड नेट इनकम इन द बिजनेस. ठीक है, इसके लिए हम रिटेन्ड अर्निंग्स का भी फॉर्मेट देख लेते हैं। So opening retained earnings, this is the opening account. You add net income over here and you subtract dividends from this to get the closing retained earning balance. So it is just a matter of division कि कितनी अमाउंट आप शेयर होल्डर्स को दे रहे हैं इन द फॉर्म ऑफ कैश और कितना पैसा आप उनका बिजनेस में दोबारा री इन्वेस्ट कर रहे हैं। लेट्स टेक एन एग्जांपल ऑफ 10,000। 10,000 इज़ द नेट इनकम ऑफ द बिजनेस। नाउ द मैनेजर्स डिसाइड कि इसमें से 2,000 वो दे देंगे शेयर होल्डर्स को इन द फॉर्म ऑफ कैश। दिस इज़ कॉल्ड डिविडेंड। And the managers also decide that they will reinvest the 8,000 back into the business. Need to understand कि ये जो net income है ये है तो आपके common stock holders की ही। अगर इसमें से आप 2,000 in the form of dividend दे रहे हो शेयर होल्डर्स को तो ये तो आपका कैश के फॉर्म में चला गया बिजनेस से बाहर और ये आपके शेयर होल्डर्स को मिल गया। The remaining 8,000 that is reinvested back into the business is also of your common stockholders. This belongs to your common stockholders as well. अगर आप उनको कैश के फॉर्म में नहीं दे रहे और दोबारा बिजनेस में ही री इन्वेस्ट कर रहे हैं तो ये आपकी ओनर्स इक्विटी को बढ़ा देगा बिकॉज दिस विल गो ओवर हेयर. This 8,000 will go in your retained earnings which will increase your owner's equity. So does new equity raise capital raised indirectly by retained earnings have a cost? This is the question now. ये हमें समझ में आ गया कि retained earnings is an investment considered to be an investment from your owner's behalf. लेकिन ये retained earnings business खुद से generate कर रहा होता है. So does it have a cost for the business or not? The answer is कि yes, it does have a cost. It has an opportunity cost. If some earnings are retained, then stockholders will incur an opportunity cost. The earnings could have been paid out as dividends, in which case shareholders could then have reinvested the money in other investments. Let's go back to the 8,000 example. That the 8,000 was retained in the business. Instead of paying it out, it was retained inside the business. अगर वो 8,000 रुपीज़ आप शेयर होल्डर्स को डिविडेंड के फॉर्म में दे देते तो वो 8,000 रुपीज़ कहीं ना कहीं पे वो इन्वेस्ट करते and from that investment they would have earned something. तो because you kept the 8,000 in your business, अब आपकी ज़िम्मेदारी है कि आप उनको उतना कमा के दें कम से कम जितना वो कमाते वो 8,000 रुपीज़ कहीं और इन्वेस्ट करके. If the corporation is unable to do this, उसकी stock price नीचे की तरफ चली जाएगी. But if they are able to give them a better return, your stockholders will be happy और stock price automatically उनके ऊपर की तरफ चली जाएगी. So thus the firms should earn on its reinvested earnings at least as much as its stockholders themselves could earn on alternative investments of equivalent risk. It's the same thing कि आपकी corporation की responsibility है that they have to give the stockholders their opportunity cost. They have to return them their opportunity cost, वरना तो आपके stockholders का नुकसान हो जाएगा. It means the stock price has to go up or enough. The stock price has to go up enough और next year उनको इतना dividend मिले या तो इतना dividend मिले या stock price इतनी ऊपर जाए कि उनको इतना रिटर्न मिले कि उनकी अपॉर्चुनिटी कॉस्ट रिकवर हो जाए. अपॉर्चुनिटी कॉस्ट इज़ अ कॉन्सेप्ट स्टडीड इन इकोनॉमिक्स. इट इज़ द कॉस्ट ऑफ द नेक्स्ट बेस्ट ऑल्टरनेटिव और इट इज़ द बेनिफिट ऑफ द नेक्स्ट बेस्ट ऑल्टरनेटिव दैट इज़ गिवन अप. इन अदर वर्ड्स अगर ऐसे समझ में नहीं आ रहा यू कैन थिंक ऑफ इट इन द फॉर्म ऑफ रियल एसेट्स. आपके पास अभी जो मोबाइल फ़ोन है उसके बदले में अगर आप कुछ और मोबाइल फ़ोन ख़रीदना चाहते हो that is the opportunity cost. So the mobile phone you let go for your current phone is the opportunity cost. अब अगर आपका फ़ोन अच्छा परफॉर्म करेगा तो आपको लगेगा कि अपॉर्चुनिटी कॉस्ट से आपको नुकसान नहीं हुआ है. बट इफ़ योर फ़ोन इज़ नॉट परफॉर्मिंग वेल तो आप सोचोगे कि यार इससे बेहतर तो मैं वही वाला फ़ोन ख़रीद लेता दूसरा. Now the cost of common stock, the RS, can be calculated, but there are three methods of calculating it. So what rate of return can stockholders expect to earn on an equivalent risk investment? ये opportunity cost की हमने बात तो कर ली, लेकिन इसे calculate कैसे किया जाता है? The answer is RS, because they expect to earn that return by simply buying the stock of the firm in question or that of a similar firm. They're talking about your required rate of return. You have already studied capital asset pricing model. आपको पता है required rate of return किसको बोलते हैं. It is the minimum return that is required by your investor. इतना return तो उनको हर हाल में चाहिए, because all other assets in the market of similar risk are giving that much return. अगर उतना return नहीं दे पाएगा business, so the business has not performed well. Therefore, if the firm cannot invest retained earnings to earn at least RS, it should pay those funds to its stockholders and let them invest directly in stocks or other assets that will provide that return. Now, there are three methods of calculating this RS. One is capital asset pricing model, the other is discounted cash flow, and the third is bond yield plus risk premium approach. And this will be our tomorrow's topic.